Welcome back. Well, it's at the day's high for the markets. We've comfortably surpassed 8550 as we speak, and the mid-cap index also gaining steam and working towards the 14,000 mark as we speak. So the mid-cap index up around 1.3%, 1.13% you'd have to say. But there are a lot of stocks which are buzzing today. We have PTC India Financial Services also, where there was a divestment of one of the stakes that they hold worth 300 crores, and that stock also holding up quite nicely. But let's get talking on some more numbers. We have Mr. Vellayan Subbiah, the MD of Chola Investment and Finance, joining in now. Hi, Mr. Subbiah. Thank you very much for joining in this afternoon. It's been an overall stable quarter for you all, but I just wanted to start with the asset quality. If you look at it on a year-on-year basis, there's been around a 40 basis points worsening that's taken place on the gross NPLs. Where did the worsening come from this quarter, and what's your guidance?
So overall, the GNPA has been, I'd say, kind of fairly good for the first quarter. First quarter traditionally tends to be our most difficult quarter because the markets are usually down the first and second quarters. And given that the GNPA is at about 3.33% now at the 150-day provisioning, which is where we're at, we're still seeing overall weakness in terms of kind of the commercial vehicle market. And that was combined with a slight increase in GNPAs on the home equity side as well this quarter. But the good thing is that we don't see it at overly alarming levels. We haven't seen significant deterioration, and we believe that over the next few quarters things will begin to get better.
How is your CV portfolio doing in terms of incremental disbursements?
So disbursements were up about 12% this quarter against a comparable quarter last year, which we think is quite encouraging. Most of the growth has come from heavy commercial vehicles and our used portfolio. So we're seeing significant growth both in the used portfolio and heavy commercial vehicles. Also, we've been fairly robust in a weak market on the tractor side, though we are cautious on disbursements there.
Okay. If I'm looking at your disbursement chart, Mr. Subbiah, your MSME or your medium to small enterprises disbursement seems to have declined quite sharply in the quarter, though it might be on a low base. But what's the strategy there?
So our MSME business is traditionally, like you said, it's a very small component of our overall portfolio. I just like to say that our SME loans, right, are also basically our LAP business. Our loan against property business also has SME loans in it. The MSME portfolio, basically what we're looking at is more working capital loans and term loans to clients, with collateral other than property. And we're basically looking at that product and seeing what parts of that product are actually more scalable. So, in that segment, we tend to see variance from quarter to quarter. But I do feel that the second half of this year, we are going to see growth from that business as well.
Did you see a significant reduction in your cost of funds on a year-on-year basis, which led to this net interest margin improvement?
Yes, definitely cost of funds has gone down. We have changed our mix a bit away from term loans and more towards money market borrowings. And we're seeing the rates for NCDs and CPs be much more competitive than we see in the term loan market. So that has definitely helped our NIM.
Okay, so what were your cost of funds this quarter, and how much do you think you can average for the entire FY16? And subsequently, what would your guidance on net interest margins be?
So our belief is that net interest margins will stay, more or less at the current levels that we've indicated for the quarter. It's also helped that as our mix moves more towards used vehicles, our net interest margins do get a boost from that as well. Our cost of funds, our estimators would probably drop by about 25 to 30 bips this year compared to last.
Okay, so what can you average in terms of your NII growth for the remaining quarters? You did a healthy 25% this quarter. What can we do in Q2 and maybe in the second half as well?
It's always tough to give guidance in a market like this. We're all waiting for Achedin. I think part of the challenge is we just don't know exactly when they're going to come. What I would say is that we're very ready for it, for Achedin when it does show up. But at this stage, I would say our bias is still a bit more towards collections, which means that, we'd be at the current NII growth levels or slightly lower for the year if the current environment continues. If the environment does tend to get a lot better, then we can see a shift.
So are you worried about your gross NPAs worsening further? What are you maybe trying to curtail it to by the end of FY16 from this 2.8?
See, at the end of the year, my sense is that we should be back, we should be at the current levels. Traditionally, the next quarter, which is the quarter we're in currently, tends to be quite bad as well because of the monsoons. The monsoons tend to affect performance because road transportation gets significantly affected. And in an environment like that, we can see the impact, the monsoons playing out negatively for us. But if you're asking me at the end of FY16 what we're going to be at, I would say that we should be at the current numbers, if not better.
Okay, and just quickly, how did your rural portfolio do, or any sort of exposure that you have to the rural space? How did that perform in lieu of maybe a below average monsoon as well as unseasonal rains?
Yeah, so definitely, the volatility in the rural market is quite high. We did have a small, we look at the agri-business, and there we've seen a lot of concern. There's uncertainty, overall in performance on that front. But we do see that on the rural side, in the vehicle business, obviously tractors has also been affected negatively as a result. We do see that if monsoons are good this year, we should see some pickup in that portfolio. But right now, it's still fairly sketchy in terms of performance.
Okay, all right. We leave it on that note, Mr. Subbiah. Thank you very much for joining in and talking to us. So that's Chola investment. Not too much of a reaction in terms of volumes. It's quite a quiet stock, you'd have to say. But it's not very quiet for the markets. The Nifty surging ahead, up around 0.3%, comfortably above 85.50 as we speak. But that's a wrap on Street Science. Stay tuned. Halftime report just after a short break.